Hello traders, Gary Wagner with the Gold Forecast here. It is Friday, November the 5th, as we say in Honolulu, Hawaii. Happy Aloha Friday. This is the Gold Forecast's weekend review. Wow. I know, I've said it twice in 2 days. 1395, 1396. That is the current price in gold. Of course, as we look at it, trying to make that stab at that elusive 1400, we see that it's closely approaching that. The other thing that we're going to be talking about today is the type of candle that we're looking at, which is that umbrella line that we see so often, that hammer hangman, and most importantly, what that's telling us. Now, the high today, and of course there's a bid-ask spread, and we're looking at the lower of the two, 1397.96, call it 1398, puts our record top right now right around 1399. But what I'm finding interesting is this buy the dip mentality, and we've talked about this many times. Whenever you get a hammer or hangman, what is happening is, of course, this body is the relationship between the open and the current close, or the current print. And so what happened is, at some point, traders really brought this market down, bringing it down substantially to around the 1370 point, but that buy the dip or safe haven mentality comes in, pushes that market back up, and that's where we have this current print right in here, as I said, right now trading around 1395. Of course, what I'm finding more interesting right now is the fact that even though the market is up, as I said, $2 to $4 higher, it's how the market is up $2 to $4 higher. Now, in terms of the price change, the strengthening or weakening US dollar is actually taking away about $10.60 from the price of gold, but predominant buying is adding $13.50, gives us a net change of about $3 higher. So that you do have a firmer dollar and you have firmer gold. It's always an interesting scenario when we see both happen at the same time. You know, traders, I'm still recovering from yesterday's trade activity. No one has really ever seen a day quite like what we saw in yesterday's trading activity with this large red candle. And then we do have some follow through today. So the $64,000 question has got to be, so where is gold headed, and where are we looking for this market to go? As a straight Elliott Wave technician, I have done some work. We talked about it a little bit yesterday. This is kind of my worksheet over here to the right. And as I say, I typically do not show it, but I do talk about it. But I thought that it is kind of interesting and is worth noting today. What I have done here, these lines up in here are what's called Fibonacci projections or Fibonacci extensions. What I am doing is a simple mathematical computation in which I'm taking the beginning of wave 1 to the end of wave 1, because we tend to use that as our benchmark. I then take this and project it, as you can see here, and then look at where that would take us to, so that if wave 1 and wave 5 are the same, you're going to get this 1420, and that's where I pulled that number from. Now, the interesting thing that I'm finding is 76% of wave 1 comes out to 1395, right in this area, and I'm going to kind of extend that down to the bottom, and I think that you can see quite eloquently that we do have a top right at that point. Now, do I think that's going to be the top of the market? Well, I don't know. No one knows the future, but I can say this. I do personally believe that this market will take a stab at 1400. I do believe it will effectively trade above 1400, but I also believe that there is a chance, and a strong chance, speaking in terms of Elliott Wave, that this wave 5 is going to be the final wave up until we go into what's called our corrective phase, and thereby kind of retrace little by little over time once we do hit this top, wherever that top may lie. Now, traders, of course, we are long. We got long back at 1337. We were stopped out and quickly re-entered the market at 1340 to 1345. Market is currently trading 1394. Our stops are going to be maintained. We will move them on Sunday. But for right now, I just want to have Saturday to do analysis of the market and see where it's going to go. We will maintain our long position. We will maintain our long stance. And it is my belief that gold should sometime next week attempt to take a stab and take out 1400. The question is, how high will it go, of course? Now, as I had mentioned, in a typical market, wave 1 and wave 5 are equal. That's typical. I can honestly tell you that we are not looking at a typical market. So that if wave 5 is 1.21, 1.5, 1.61 times that of wave 1, which puts us into the mid to the upper $1,400 range, that also wouldn't surprise me. We'll talk about some of those calculations on Sunday. In other words, where would the market take us at 1.61 times that of wave 1? And we'll look at different scenarios. I can tell you this. Traders, this has been a ride unlike any ride I've ever taken. We are at record tops, all-time record tops in gold. We've been long the entire ride up. It has just been brilliant, to say the least. It's been a beautiful market. Quantitative easing did take place. My personal sentiment is it's really not the best way to go about stimulating the economy by printing more money, but it certainly has a positive effect on gold. This has been Gary Wagner wishing you, as always, good trading, and we will talk to you on Sunday for the Daily Report. Bye-bye.